What's good, everyone? What's good? All right, guys. So, happy first of the month, right? It's the first day of the month. Monthly candle has officially closed, and let's go look at that bad boy. Let's see how it closed. Nice. Yeah, we may pop back up before we move down, but I still stand by this imbalance. This imbalance still gets my attention. But nice monthly candle. We had a monthly up close candle. We may be getting this previous candle high before we see anything else, but so far so clean, like really clean. Here on a weekly perspective, you guys can see that my objective, it remains the same. I haven't changed it. It still remains that 107 to 80 level. Okay, I remain pretty bullish. How we came into that previous weekly low right there, boom, and then we traded away from it. One sec. Okay, so on a daily perspective, I'm looking for more longs into these highs. Okay. It seems like a very logical objective, but today I feel as if we may get a return back in here before we continue pushing to the upside. So I am looking for some potential reversal to even come below Asian lows. It could be something as simple as Asian lows. Doesn't necessarily have to be to that daily insufficiency. It could be the Asian lows themselves. But I am looking for a return back into this area at the moment. Okay. Now I know we have a couple hours before FOMC, so I'm just preparing for this. I'm not going to make any projections on FOMC. I'm just going to make projections on the day. In terms of entries or anything like that, you guys are going to have to see that part for yourself or figure that piece out for yourself. I believe I've taught enough to give you guys a good sense of directional bias and in terms of price action and how to follow order flow. So today will be a little bit of a shorter session because I have zero intentions of participating in this morning. Okay. And I want to paint that image for you guys too, because FOMC is a pretty high volatility news event. Okay. The last FOMC we had, I can probably look at it here. Let's see. The 29th, maybe. I think the last FOMC was on the 20th of September. Look at that. It was the low of that run. Okay. I'm not saying that we are going to create a new low, right? But what I am saying is that we can potentially get a really impulsive move for this week. Notice how most of that week, remember my tweet from Monday, I mentioned that the range of the week will be created from Wednesday to Friday. Why do you guys think that is? Why do you guys think that is? Because of the news this week, right? FOMC and NFP. So now we have created a pretty decently sized range here. So maybe here on Tuesday we'll keep the low of the week, but I'm personally seeing that we can really get a nice return and then run for liquidity. Okay, so in terms of PMI, there is news at 10 a.m. It is manufacturing PMI. Okay. And personally, I'm, again, not really looking at to trade PMI. I don't think that any of these news are going to be high volatility. Not anything that we really need to pay attention to. But yeah, for right now, I do see more longs and a daily perspective into this previous area of distribution, this very well placed, unmitigated bearish order block. This area is still unmitigated, so just beware of that. There's a breaker right there too. So that area is still unmitigated. So maybe from that area is when we start pulling back down into here, right? So again, I'm just kind of looking and see where we'll get these reversals. I'm looking for key levels in which price action, not where I'm looking for it to reverse, but where it could potentially reverse. Okay, so yeah, so on Nasdaq and indices, for dollar, I'm still bullish. You guys already see where I'm bullish too. Okay. Hopefully we don't get there before our news event, because then I'm gonna have to reassess. Okay, for anybody in my private study group, I will be, giving you guys projections for FOMC. But yeah, no, in terms of right now, I could only tell you what I see long term, and I see long term shorts on indices, right? So that's why I'm super bullish long term on dollar. I do believe that this previous area of accumulation is going to be the one that we come back down to, boom, and then go higher. Okay, not to, to be over here forecasting, but that's kind of what I'm seeing here. I want to see something that will support my short bias, right? Because I am short for FOMC on indices. Shit, I should clarify that. On indices, I am short for FOMC. Yeah. So far, so good, though. I would love if we left an imbalance intact here, honestly. I would really love that if we just left an imbalance there. Doesn't necessarily have to happen, but ideally. Okay, we're almost at the... Oh, we already got there. At the mitigation point of this previous area of distribution. Yeah, again. So far, the accumulation, the accumulation has been complete. We've opened, right? Got an accumulation. Then we're manipulating price to our preferred area, our preferred premium array. So price action is moving from one array to another. It moved from this bullish order block. Now moving to the mitigation candle. Now maybe from the mitigation candle back down to this previous daily high, and then back up to a preferred premium array, right? And so we're moving from a discount array to a premium array to a discount array to a premium array. And right now we're trading into premium arrays. Okay, we're yet to get into premium, I believe, itself. And so that's what I'm looking for, is premium arrays. Anything above this orange line right here, specifically this imbalance right here on the left, really gets my attention. Yeah, that area really gets my attention. We'll see what happens, though. There's two areas that really get my attention. It's this one and that one. So we'll see what ends up happening. On both areas, we could definitely distribute from. But ideally, I don't want it to go much higher than where it's at. Maybe 50%, but I want to see an imbalance be left behind. A weekly imbalance be left behind. So, like I said, in a couple, I think in like 43 minutes, we have PMI. I don't believe I'm going to be on for that, guys. I don't believe. I just came on here and wanted to, let you guys know what my thoughts are about FOMC. I do believe that this is going to continue pushing up through to FOMC, or getting closer to FOMC. We're going to remain bullish until then. I remain bullish across the board when it comes to this morning. Okay. And when it comes to objectives, I mean, previous daily highs, and Dow Jones has this previous area of distribution as well, and the one right above it. So there's a couple areas that I'd be paying attention to. But in terms of this morning, I want to see price action continue bullish. I mentioned this on Twitter too, guys. If you're not following me on Twitter, you're missing out. I call out these type of things all the time. So I mentioned on Monday that the longs would hold out through to FOMC. Okay. If we were going to go long, we were going to hold these longs through till FOMC. Here's that same 4-hour imbalance that we marked out on Tuesday. The same one that we came down to and are pushing price away from, created the low of that day. Same with NASDAQ. We mentioned that no lows would be taken. Now here we are creating all of these lows for FOMC. Right? So I'm still very bullish for indices as of this morning, but for long-term FOMC, I'm bearish. Okay, I want to see some bearishness come in. Maybe FOMC won't be the bearish one. Maybe it's NFP that ends up turning this whole thing around. But I'm going to be very patient. I'm going to wait for FOMC today. And I'm going to wait for these drops. I mean, we've been calling out shorts on EU for a whole month now. We've been trying to get this thing to fucking short, right? And we're finally shorting off. And you guys can see this very clean, right? I know a lot of people were bullish, and I get why so many were bullish. Look at my students who know this one. What is this order block called? The one that my mouse is on right now and that we rejected from, created the hive yesterday. What is that order block called? Drop it in the chat for me. I need to get those fingers moving. I need to see that you guys are awake, that you guys are paying attention. We're not going to be here for much longer. I'm going to stay through the open, but that's about it. Yes, exactly, Zay. That's called a rejection block, right? Yep. Rejection block. Perfect, perfect. Everybody from the bootcamp got it. Shibin got it. He was not in the bootcamp, but he went through a bootcamp itself. So glad. Okay, cool. The rejection block, right? Why were we not bullish, guys? Why were we not bullish? Even though price action and structure was bullish, why were we not bullish? We were respecting these gaps to the downside. All we've done is respect those gaps every single time, right? And then on the downside, we created some major insufficiencies, just taking it all back. So we've been super bearish on EU. Okay, and I remain bearish on EU. I believe that FOMC is going to get like a retracement. I pray that we come above Asian high and then distribute towards the downside. That's kind of what I'm looking at for EU. I want to see us get back into this area right here. Okay, I want to see us get back into that area right there and then continue to distribute towards the downside above Asian highs. Okay, I'm still very much bearish on EU. Okay. So we'll see how all of this stands when we get back to FOMC. But I mentioned them this morning. Hopefully you guys were paying attention. Okay. Excuse me. I mentioned it this morning. Imbalance. That imbalance was going to short price. I mentioned it on DXY. That we were going to continue pushing higher towards those higher time frame liquidity objectives. And I mentioned this imbalance on EU. It was a little too low for me to want to take it, but it is shorting very nicely from that area. Okay, we're shorting very nicely. I know with my private study group, we were looking at these shorts right here in this same area. I mean, we ended up respecting it very nicely. Right, so S&P. Key levels to pay attention to. For me, we're still bearish, but this, let's see. This could pull back enough to come back above previous weekly high. at the most, which is right there, back into that imbalance. We could pull that far back. It is a possibility, but this is my first area, is this previous area of distribution right here. That's the first area that I'm paying attention to. Okay, I'm gonna remove some of this stuff on the left just because there's a shit ton of it. Okay, I want to keep it more clean. Yeah, these are the key levels that I'm paying attention to. First, this previous area of distribution, then that high, for potential reversal patterns. What are we looking for in a reversal? Can you guys tell me, what do you look for in your reversal? So now let's say you have your higher time frame area. What do you look for in there? What do we look for in these higher time frame or these key levels that you're looking for in a reversal? What are the characteristics of your reversal? Drop it in the chat for me. What are the characteristics of your reversal? What are you looking for? I see one answer. What are the characteristics? And I'm asking everyone, not just one individual. I'm asking everyone here. What are the characteristics of a reversal? Breaker structure, okay. Displacement, all right. Breaker and imbalance, I think a little too specific. What do you look for in a reversal? Come on, guys. I'm looking for a specific word. I'm looking for a specific word. Okay. And the displacement is good. Okay. The displacement is good. I get the displacement part. And it's not incorrect. And none of your guys' answers are incorrect, by the way. The displacement, breaker structure, breaker imbalance, like none of those are incorrect. I just think they're being too precise. But yes, you would essentially look for a displacement. Okay, but what if you don't get a displacement? What if we don't sweep that liquidity? Like, what do you wait for after we sweep that liquidity? Because usually the sweep of liquidity is the higher time frame key level. Order flow, yeah, very, very general. Now we're getting too general. What do I look for and have been looking at between just September till now? What is the one subject I've been touching again and again and again and again? And I know some of you look at it and it goes right over your head, but some other of you are looking at it and hearing me pointing these things out every day after day and get mind blown by it. Those of you who are paying attention are the ones who get... There it is, Daryl. Thank you. There it is. We look for a displacement or divergence. Right? We look for a displacement because not always are you going to get displacements. But almost every time we come to these key levels, we get divergence. For example, yesterday. What happened yesterday? Right? What happened yesterday? Look at this bullish order block here. Okay? This bullish order block. We're going to pretend it's a higher time frame key level. Okay? We're going to pretend that that is a higher time frame key level. Okay? And then we're going to bring up the other two. Let's go to NASDAQ. And we're going to keep NASDAQ, the very first one on the left, S&P the very middle, and then Dow on the very end. Okay? We're going to go back to yesterday. NASDAQ trades into new week opening gap. S&P trades into previous area of accumulation. Dow trades into that bearish inverse imbalance that I marked out for you guys yesterday. NASDAQ, let's go to the 1 hour, into those areas now. NASDAQ takes out the low. S&P doesn't take out the low. Dow takes out the low. What is that? Well, you see, NASDAQ took out the previous daily high. S&P took out that previous daily high. And then Dow on that day had taken that previous daily high. Right? But it took more than that previous daily high. It took a little bit more. Right? But this is bullish divergence. We're really deep in discount. So it doesn't make sense to look for more bearish divergence when we're really deep in discount. It makes more sense to look for bullish divergence. And this is what we're starting to get here. Right? Some clear bullish divergence. Right? NASDAQ took out the low. Now let's take it one step deeper. Let's go even deeper. Okay, let's go to the 15-minute. Class is in session today, right? Class is in session. Let's go to here. Okay, so we have divergence on the 4 hour and 1 hour. And then look at this. Look at this. What happens here? 9 a.m. creates this low, and then 10 a.m. comes in. 9 a.m. on NASDAQ, 9 a.m. low is right there. 9 a.m.'s low is intact. 9 a.m.'s low does not get taken out. Look at 9 a.m.'s low on S&P in the middle. 9 a.m.'s low gets taken out right away by 10 a.m. Come over here, 9 a.m.'s low gets taken out right away by 10 a.m. You see, guys, most of us understand price or time, but we're not understanding them both together and understand that most people tell me, oh, time is more important than price. Price is more important than time. That's bullshit, man. They're both intertwined. They're both the same. Saying one is less important than the other is bullshit. They both go together hand in hand because, answer me this. What does a specific time mean if price does not align to it? What does a specific time, what does this silver bullet time, what does this 9:30 opening time mean? What is this silver bullet? Let's talk about the silver bullet. What does this specific time mean if price doesn't align with it? What does it mean? What does that silver bullet window mean if price doesn't align with it? Drop it in the chat. What does that specific time window mean if price does not align? Nothing. And nobody said anything because it means nothing. It's invalid. Yes, Daryl, there we go. It's nothing. A specific time means nothing if it doesn't align with price. Vice versa. What does a specific price level mean if time does not align? What does a specific price mean if time does not align? It's not less probable. That's not what I'm looking for sure. It just means nothing. Write this down for me. A specific time means nothing if it doesn't align with price. A specific price level means nothing if it doesn't align with time. time and price, not one over the other, not the other one over this one or under the other. It's both of them intertwined at the same time. If you do not have price and time, if you have price but you do not have time, you don't have a trade. You don't have a less probable trade. You just don't have a trade. Price means nothing if it doesn't align with time. A lot of people brush off time, but I promise you, if you want to stay probabilistic, if you want to stay on the higher end of the market, if you want to stay on the more consistent part of this industry, you have to look at the market in this level of depth, right? You have to look at this market with this level of understanding. Cool, I'm glad that you guys are studying price, but now you need to align your price with time. And if price and time don't align, you have nothing. Nothing. And the moment you learn how to accept that, you will have a way easier time in trading. I promise you. I promise you guys that. Okay? If the specific time doesn't align with price, it means nothing. All of this stuff that I'm showing you guys on the charts means nothing if time doesn't align to it. Okay? The timing aspect of things is so important. Alright? So drop some 7s in the chat if you guys learned something today. Drop some 7s in the chat if you guys learned something today. If this hits you a little bit differently than when you guys hear me talk about time and price separately. I usually talk about both of them separately. Never really specified this. Okay? But drop some 7s in the chat if that makes sense to you. I want this to make sense to you guys. Time and price. Time and price. So, real quick test. Okay? Quick little quiz. What do we look for in key levels? What do we look for in key levels? What are the two things that we mainly look for in key levels? Come on, we just talked about it. What is it? I think Fabio showed up a little late. There we go. That's one. That's one. Yep. Divergence is one. And what's the second one? Everyone said it at first. Everyone that, that was saying divergence initially said something else. And the initial answer was not incorrect. Displacement. There we go. Thank you, bro. Thank you. Perfect. All right. So, on a key level, and Juan, you're not wrong. Okay. These things have to align. When looking at a key level, okay. When looking at a key level, you're looking for divergence. Okay. We're looking for displacement. Or let's call this a market structure shift. Okay, or break a structure displacement. You guys know how I call them, market structure shifts. Okay. Divergence, market structure shift. And yeah, those are, oh, and then time, right? Because it means nothing if it doesn't align with time. It means absolutely jack shit if it doesn't align with time. Okay, so when we're looking for a key level, okay, when we're looking for a key level, we're looking for these things to line up. Okay. A market structure shift, divergence, market structure shift, and time. This one can be either or, so I'm going to leave it like that. And then time. Okay. So, I know we were only here for a little bit, but whoever is in these longs, they're bussing. As I mentioned, I'm long on indices for the morning session. I'm long on indices. I see a bit of divergence taking place at a key level, right? We've identified our key level. We see a previous daily high taken. No previous daily high taken. And previous daily high is taken. Okay. Key levels. All right, guys. But again, I'm personally not going to be participating this morning. I am going to be participating later on today. So for those of you who tuned in at the beginning of the call, shout out to you. Thank you for being here. And as I mentioned earlier, I am going to be cutting it short today due to FOMC. I'm not looking to be active or promote any activity throughout this session, right? So if you do trade, just know that it was by your own will, all right? And I don't want to promote an active morning on FOMC. So we're going to cut it short right there. I do have one announcement for you guys. And it's more personal, I guess. So as some of you may know, I've been diving in a lot deeper into the market maker structure buy or sell model, okay, by ICT. I've been diving a lot deeper into the market maker buy or sell model by ICT, okay. And I'm going through a course or two. I haven't even started the second one. I'm going through one right now, though, one of the two. And I'm learning a lot of stuff. And as I learn and find credibility within these concepts, I want to be able to show it to you guys, but I haven't traded it myself successfully. I haven't applied it to my concepts, or I haven't, they teach you their way of trading. And so I have yet to implement that experience with the way that I trade, right? Because I don't just study something, copy somebody else, and then, change my whole trading style based on what that one fucking person taught me. I go deep and I learn from these individuals and I apply it for myself, right? And I see what works, what doesn't for me, and I leave everything that doesn't, and I stick with everything that does. Okay? So as I'm going through this learning process, it's very hard for me, or difficult. It's very challenging, I should say, very, very challenging. It's very challenging for me to teach and apply these concepts as I go. And because I'm applying new concepts, I can't really teach those things because I don't have the experience for it yet. So sometimes when I mark things out, I have to deviate from marking things out because I don't want to have to explain them, because I have yet to learn or acquire the ability or enough information and experience to explain it. So given that I'm going to be studying for the next couple months, I'm going to stop streaming New York session for December. Okay. The month of December and a good chunk of January, I will not be streaming. I'm going to dive into my studies. I'm going to learn. I'm going to come back harder, better, than ever. Okay, so throughout November, I will be streaming. I'm gonna pull up the calendar right now. Okay. My last week of streaming, or my last day of streaming, will be the 24th. Okay, the 24th of this month is going to be the last stream for a couple months, a month or two. Yeah, probably for sure through December. You guys won't see me do any New York sessions. But definitely keep an eye on the community. Okay, follow me. Make sure you're following me on Twitter. One of the other reasons why I'm doing this is because I want to focus on growing Twitter, and I want to focus on growing my Instagram. Okay, and I've been really focused on just doing live streams, and it kind of fakes me to believe that I'm putting my reps in. You know what I mean? Because my live streaming is very easy for me. Okay, and I love live streaming, and it helps me put out content. But I'm noticing that our views stay exactly the same, if not lower than ever. And so I believe we need to be able to get the word out there. And I'm not going to leave it up to anybody else but myself to be able to put the word out there. And that comes with reels, that comes with YouTube shorts, and that comes with more consistent content than just live streaming, unfortunately. So I'm going to be, working on myself, taking some time to refine my strategy when it comes to this market maker buy or sell model from ICT. And yeah, just wanted to give you guys that heads up. Okay, I'm gonna obviously announce that a couple of times, but just want to give you guys that heads up. Make sure you're following me on Instagram or Twitter. I'm gonna be way more active on Twitter than Instagram. I'm not gonna lie. I'll post videos and reels on Instagram, but that's as far as really Instagram is gonna go in terms of charts, announcements, and streams, because it's not like I'm not gonna stream ever again up until I get back. I am gonna stream with you guys. I'm gonna do streams, but they're not gonna be scheduled like they are now. Okay, if I do a stream or two, it will be announced on Twitter. If you guys don't have my Twitter, please make sure you follow me. It's right here on the bottom section. Okay, Inner Wealth is our YouTube. Inner_wealth_ is our Twitter, and then you have Instagram, which is my Honcho Mindset page. Okay, so you guys can stay in touch with me. If you guys have any questions, there's also description on this video. Okay, the description on this video does have it does have the link tree where you guys can reach me. You guys can book a free one-on-one with me. I mean, there's just a lot of options. So if you want to stay in touch, you guys know how to reach me. Okay, make sure you guys stay in touch. You guys stay connected. And yeah, I'll be announcing the return, after the holidays. Just taking some time to refine this new strategy that I want to implement. Okay. So guys, with that, I'm going to let you guys go. Have an amazing rest of your day. Have safe trading, responsible trading during FOMC. I don't want to see anybody blowing their fucking accounts. Okay, make sure that you're trading responsibly, guys. All right, so yeah, I'm gonna leave it right there. Take care, clap easy, and I'll see you guys tomorrow and for the rest of this month. All right, love you guys. Peace.